Hello everyone, my name is Rob Clayton and thank you very much for joining me to this short-term outlook on commodities. In this webinar I shall be talking about energy and metals. Energy will be the West Texas Intermediate Crude, and with metals I'll be taking a look at gold and silver. Before we begin, I would just like to make a note that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. The silver market momentum was ignited to the upside early last week after reversing unexpectedly from the support level of $16.15. With the bulls regathering and momentum increasing, the market clears the level of $16.85 and now reaches its target of $17.2025. After printing a 2.5-month high of $17.20 in New York, the market is now questioning whether we've reached the top, purely for the fact is that we've posted a long-legged doji. Now, in theory, the long-legged doji acts as indecisiveness amongst the market traders. I'm keeping a close watch on the technicals, purely for the fact is that if we do get a retreat from $17.2025, we could be looking towards $16.85 in the next 24 to 48 hours. However, that being said, as the global geopolitical tension heightens with the US and North Korea, could see silver rallying on beyond $17.2025 and spiking towards $17.45 to $17.65.75. As I mentioned, the posted long-legged doji acts as indecisiveness, so it really needs to see in the next 24 hours how the market will play out. But as I caution, there is a possibility we could see a slight pullback, and the reason behind that is that gold has softened up for the start of this morning. Looking at gold, as you can see now, the market has reached its objective of 1,296, and now from a daily outlook, questions whether we've seen a high for now. With the slight pullback that we're seeing at the moment, I still heed caution for those trading possibly not to shorten at this level, purely for the fact is that if we break 96, I do expect to see a dynamic rally. And as you can see from the Trump election, the market did escalate from 95, 96 up towards 1,335.40. And this pattern could easily be repeated. So a little bit of caution trading from the short side in the event that we do see a strong break to the upside, but it'd be most probably be displayed as a stab action more like, and not as a slow climb that we're seeing over the last few days. As I did mention with silver, the geopolitical tension is increasing with the US and North Korea, and as gold is seen as a benefit to a bullish safe haven, the fourth consecutive day of demand will pressure this level and see how it plays out. Any pullback sees minor support now at 1,284 and a base now forming from 72. So I would say from the pattern that we have here is that the strategy will be to buy on dips, and as long as we maintain above 72, then the overall view will remain to 96 or above, with the next resistance coming in at 1,302. The oil outlook is pretty much unchanged and still keeps to a bearish sentiment. Although slightly higher from Friday's close, the market overall ended up on losses as concerns still continue from global supply. If the pattern sticks to what the technicals imply, then we should see further weakness and the market move towards 48.40 and lower, with the objective coming in at $46.70.75 and reassess from there. As I mentioned, the market does appear weak, and since we've seen the second rejection from 50.40, I believe the market will continue to be contained by that level, and any advances should give selling opportunity to see eventually possibly a third rejection and keep the overall stance to a bearish outlook. So that wraps up my short-term commodity outlook. Thank you very much for joining me, and I hope you have a wonderful start to the new week.